Welcome to Sector Watch, your weekly pulse on what's moving in crypto. This week's markets momentum hit a wall. Bitcoin and altcoins stumbled, liquidity thinned out, and fear started creeping back in. But one sector held up better than the rest, that is DeFi or decentralized finance. As AI and Memecoins took double digit hits, DeFi showed relative strength with sustained volumes and growing user engagement. Let's break down the data, starting with the most resilient player this week, obviously DeFi. The market cap for DeFi sits at $115 billion. The total value logged sits at $112 billion, which is down 5.6% from $119 billion last week. If we look at the sector snapshot, in a brutal week for discount sectors, DeFi proved its resilience with speculation waning and users seeking utility. Capital continues rotating into protocols delivering yield, permissionless liquidity, and programmable stability. Even with a slight total value log dip, the sector saw consistent protocol activity, new product launches, and increased mindshare, signaling that DeFi may be back in builder mode. So let's look at the protocol and platform movers. Hyperliquid, the trading volume jumped 32% month on month and now accounts set for 80% of all on-chain purpose volume. Hyperliquid does that. And then we've got Aave, which is set to roll out the umbrella on June 5th, a major safety module upgrade, introducing a new staking mechanism to protect against bad debt. Then we've got Infinify launching on June 3rd, its first on-chain fractional reserve system aimed at enhancing yield on stables. Then we've got Sui. Validators have voted to hard fork the chain to recover the 162 million post CETUS hack and Ethereum DAO style deal, showcasing community coordination. The CETUS hack was something that happened a month ago and has affected the Sui network a lot. Then we've got Tether, which rolled out the XAUT0, a gold-backed omni-chain stablecoin on the Telegram blockchain TON, making a move towards multi-chain DeFi-backed assets. Then we've got Coinbase X-Base enabled DeFi support for wrapped XRP, CBXRP, Coinbase XRP token, and DogeCoin, obviously CB Doge, opening new liquidity routes for its L2. So now you can have more liquidity incentives as well. And then we've got Mantle, which is now the number one DeFi protocol by mindshare, overtaking Aave and Pendle, fueled by buzz around the Mantle backing news that we've seen around as well. So if you look at the sentimental and structural themes, we'll do a quick check on that. So we've got the real yield plus modular structure demand. Projects like EtherFi, Agent Layer, and Pendle continues attracting total value lock by offering yield without dilution or gimmicks. Meanwhile, Ronin's Chainlink integration with Rocket Pool shows cross-chain staking is maturing. We've got DeFi infrastructure which evolves. Consensus acquired Web3 to enhance MetaMask user interface and user experience, especially for non-EVM chains like Solana and Bitcoin, a sign that DeFi infra is expanding beyond Ethereum. So that's it for DeFi sector. Now let's get on to the next sector that we see, Memecoins. So the market cap for Memecoin sits at $75 billion. It is down 13% this week. If we look at the sector snapshot, the Memecoins took a sharp hit this week as Pump.Farm announced a $1 billion ICO. That's in shockwaves to the Solana meme economy, with fully diluted value of the Pump.Farm pegged at $4 billion. Traders have panicked, fearing this race would suck liquidity out of the existing meme market, and it showed in the markets. At the same time, the Memecoin sector found new energy to Trump-themed Memecoins has stood social file for a Bitcoin ETF, and the SEC officially stepped back from regulating Memecoins. If you look at the top movers and what has been happening in the trending coins, we've got Fartcoin, which is down by 18% in the last 24 hours, hit hard by the Pump.Fund driven sentiment collapse. Although on the other hand, SPX 6900, which we covered on CoinCheck, has been doing good. It's defying the trend and it's up by 135% in the last 30 days, and it's gaining back the influencer momentum, and it has a more Pump.Fund affiliation because it's more affiliated to Murad the influencer. Then we've got the Trump meme coins following the Truth Social ETF news. Coins like Trump Dinner went up 1066%, Trump AI went up by 481%, and MAGA People went up by 470%, all in a 24-hour window. So if we quickly look at the narrative watch, we've got the Pump.Fund panic with the 1 billion raise. Pump.Fund sparked fears of a liquidity drain. Many Solana meme coins dumped, but some are slowly recovering. The backlash also reignited concerns around the high fully diluted value and low float launches. I mean, that's quite a big amount to raise $4 billion at a fully diluted value. So people are very scared about what's going to happen with Pump.Fund. And that's why memes have been getting drier and drier. So once we get more news on the Pump.Fund, we'll understand what's happening with the meme sector as well. We've got the Trump ETF filing. Truth Social Bitcoin ETF application created a Memecoin super cycle for Trump-themed meme coin assets. DJT stock, which is Trump stock, closed by 2%, and even Millennia coins saw a bump. This rally came in after a few days. SEC confirmed it won't regulate meme coins, a nod that turned into green light for speculative frenzy. Then we got Floki's Valhalla goes mainnet. Floki is ready to launch Valhalla. It's 50 million Metaverse game with ambitions to go from meme to Metaverse. Floki is making one of the most serious pivots in the sector. Expect heavy buzz once the mainnet goes live later this month. So now we'll come into the next and the last sector for the show, which is artificial intelligence. The market cap sits at $26 billion and the weekly performance is down by 11%. If you looked at the sector snapshot, the AI sector finally hit the brakes this week after roaring Q1 and Nvidia earnings already priced in, macro uncertainty and US-China tariffs tension triggered by a sector-wide cooldown. But even in this downturn, select major tokens outperform, and a major announcement from Grayscale has brought long-term confidence back into the spotlight. If you look at the top performers, we've got Kaito, which is up almost 100% in the last month. Kaito's creator AI narrative keeps building steam as it cements itself as a frontrunner in the Web3 intelligence. We've got LivePeer token, which is LPT. It is up by 78%, driven by fresh listings and rising demand for decentralized video encoding infrastructure. And then we've got Cookie or Cookie DAO, which rose 38% as the privacy-first AI narrative gains traction. If we quickly look at the ecosystem highlights, obviously we spoke about the Trump tariffs, which got the 50% hike on Chinese metal, sparked a broader crypto pullback, and AI tokens for no exception. The sector saw $5.2 billion wipeout, with major names like Tao and the FET virtues down between 11 to 30% when the announcement came out. We've got the post-earnings hangover, so Nvidia's blockbuster Q1 earnings, which was $44 billion revenue, 73% year-on-year growth in data center sales, had already lifted AI sentiment, but without a fresh catalyst, prices cooled off. Nvidia's China chip ban and export losses also cast a temporary shadow over global AI optimism. Although we've got a mix, so it's a mixed sector AI. We've got Grayscale's big reveal. Grayscale launched a new AI crypto sector benchmark calling the decentralized AI as a critical growth theme. The sector is split into AI platforms Tao, Near. And then we've got AI tools and infra, which is Ocean, Akash, and Grass. And then we've got AI agents and application FET, WorldCoin, and AGIX. And then we've also got the Filecoin X Avalanche bridge. Filecoin made headlines with a cross-chain bridge data launch with Avalanche enabling developers to tap into decentralized AI storage, and Filecoin rose 4% on this news. We've also got the Tao or BitTensor unlock coming. Tao is still the largest AI token by market cap, faces selling pressure ahead of the major 89 million token unlock this month. 216,390 Tao, 10% of its supply, which hit the market, raising concerns about short-term volatility. So that was on the AI sector. It's been strong. It's had a mixed reaction as well. So now, summing up and wrapping up, in a risk-off environment, we are seeing capital rotation across narratives. DeFi is showing defensive strength, protocols with cash flow composability, and active users are outperforming high-paced sectors. Meme coins are unraveling under the pressure of pumped-out funds, mega rise, and liquidity fear. AI is in correction mood, but high-conviction picks like Kaito and LPT are still defying the trend. So that's just what this week's sector was. The market is shifting tone, means narrative alone won't be enough. Utility, structure, and conviction are taking center stage. Whether you're rotating out of memes, holding AI blue chips, or farming DeFi yield, keep your edge sharp. We'll see you next week with another round of data-driven crypto insights. Thank you for watching T.TV. Subscribe to our YouTube channel to be updated with the latest news and developments happening in the Web3 space. I'll see you again on next Friday, and goodbye until then.